Okay, we'll directly go to the topic. The topic today is psychology of retail investors, behaviors and biases of retail investors that lead to loss in stock markets. So let me ask you one question. So what do you think about stock market? I want answer from at least 5 people. What exactly do you know about stock market? Hello.
Yeah, you can reply in the chat as well if you do not want to come onto the mic.
Karthik
probably-
will say it aloud.
Just buying of shares from some of the reputed companies are well-known companies, and based on the prices, we'll be selling it off and we'll be calculating the profit.
Okay, good one. Next, can you tell your name, please? Say your name.
Sudarshan.
Sudarshan. Okay, good.
Yeah, my name is Nagaraj Shiva. So we know that
Nagaraj.
if we know, we'll make money. If you don't know, we'll lose money.
Okay, that is psychology. Next one. Anyone? Come on, it should be an interactive session because we are going to discuss face to face. It's similar to being face to face.
Yeah. Okay, there is a message in the group. Stock market is gambling.
No, stock market is not gambling. I don't agree with that. Stock market is not a gambling.
Even I don't agree.
Stock market is not a gambling. If it is a gambling, legendary investor like Warren Buffett would not have made more than $100 billion. He never gambled in futures and options.
Okay, there is another answer. It's place where you own or part of big companies.
What?
You own some part of big companies.
Sure, that's a good answer. So, okay, stock market, I would like to explain a simple way. It is like any other market where we'll put our money and buy things. In stock market, we'll buy the stocks of the companies that are listed. It's as simple as it. It is similar to any other market. For example, if we go to a Reliance retail store and if you buy some product which is not of good quality, should we blame Reliance retail for that? It is as simple as that. So we can't blame stock market buying some shares which are not belonging to good companies and we are buying them at a higher price. Did you get me?
Yes, Shiva.
Hello. So it is similar to any other market where we are going to buy products and put our money. That's it. So we should be prepared enough to buy good companies, means good products. We are not going to buy any other product, any other unnecessary product or expired product in any market or any shop, for example. To buy anything, to buy at least say, for example, let us take a reasonable thing, phone. So smartphone. So before buying a smartphone which costs around let us say like 20,000. So if you are going to buy a smartphone that is worth 20,000, how much research we are going to do on that? We will do at least we'll go and search on the websites and we do our own research before buying a single smartphone, which we might use for like 1 year, 2 years. That's it. But when it comes to investing, as someone of you said, the stock market is gambling. People are just going towards that. I know people who have invested by taking loans from their friends and not even from their friends. Like they take loans for 5% interest per month from some other person who just use loans. Okay, unorganized loan sector, and they are putting the money in the stock market. I have seen people losing their whole wealth, like 20 lakhs, 30 lakhs, everything they have lost. So stock market is not a gambling. Before buying a smartphone, we are putting this much effort, but why don't we research before putting that much money in the stock market? That is what I and Karthik wants to change. Okay, let us get in the topic right now. So as I have said, I am a certified research analyst with more than 6 years experience in stock market. And first bias that I am going to discuss is herd mentality. So what is herd mentality? Anyone?
One
Okay.
sheep going, all the herd follows.
It's herd of sheep. Yeah, simple as that. Sheep. What one sheep does, everything does. Okay, every sheep does. It just follows the herd. Okay. So they have taken the term herd from that, basically. So I am going to read out what I have written first of all in the PPT. Then I will explain. Retail investors often display a herd mentality where they are likely to follow the actions and decisions of others, especially when they see a large number of people investing in a particular stock or an asset. This behavior leads to the lack of individual creativity and cause investors to take decisions based on the actions of others rather than their own analysis. For example, I have given the example. So if I take example and explain to you, I think it will be easier to understand for you. So there are many people. So after 2020, I think investors in India has increased by like 200% or 300%. Millions and millions of demands accounts just popped up because of the lockdown situations. So many people, mostly these fake experts, are finfluencers, means financial influencers. We call them finfluencers in our community, investing community. They create these WhatsApp groups, Telegram groups, and they start giving tips for trading in intraday, futures, options, all these things. So I have come across groups like with lakhs of followers. I used to just check in what is these people really doing. So one group, it's like 5 lakh people in the single group. 5 lakh people just following a person who gives tips. He says like buy Infosys 1900 CE and for 5 rupees and it will become 10 rupees. So your profit will be like invest 5,000, it will be 20,000 within a day or two. So first of all, people do not understand what exactly is CE. It is call option means comes in F&O, futures and options thing. So people do not even have the idea of that. Just we can easily open Demat account very easy nowadays, okay? Because there are more than 10, not even 10, more than 15, 20 zero discount brokers like Zerodha. You can easily open an account within a day or two. So, and there is no need for us to have sophisticated equipment with us. All we need is a mobile phone. That's it. All we need is a mobile phone. We can open an account. So just before trusting a person who is always boasting of he's making like 5 lakh or 10 lakh rupees per trade and he's earning in crores of rupees, what is the need for him to create these kind of groups and give tips to others for free? Are you getting me? Just compare this with any individual who is making like 25, 50 lakh, like it is a good salary, okay? If you are making anything about 20 lakh, 25 lakhs per year, that's a very good salary in India because you enter that top 6-7% of salary people if you are making this much. So they don't even have time to spend with the family, first of all. But we come across people who create these Telegram groups and they are going to post like anything. They are going to post 20 trades, 30 trades in a single day. So before blindly believing them, just think. Yes, we have to think for ourselves. Why would anyone give these kind of tips? Because I am an investor and a trader also. I do positional trading mostly, and I trade in F&O sometimes in occasions. I don't have time. First of all, I don't have a time. I don't even find 10-15 minutes in the market time. I'm not active every single minute. Even I take trade once in a week or so also. I don't have time to create all these WhatsApp channels or all these things. Even for videos also I don't have time. So I don't earn this much money. Okay, so I don't have time. But how can this person who earns like crores of rupees, they have time for us to give tips? And why should we believe them, first of all? Did you get my point? Hello? Any questions?
So, for example, like famous personalities like Rakesh Jhunjhunwala, those portfolio, those newses. For
Yes, Rakesh Jhunjhunwala, he made more than 45,000 crores, okay, but he never gave any tips to anyone.
but
He
but
refused blatantly.
we used to see, okay, this is Rakesh Jhunjhunwala portfolio, like this, like this.
Ah,
He was
that's
in.
what. Okay. These people, Rakesh Jhunjhunwala is doing nothing. Who is doing these things? What is the need for us to emulate or follow Rakesh Jhunjhunwala? He deals in thousands of crores of rupees. Any stock he buys, he has a different perspective than ours. Okay, hello? Did you get my point?
Yes, that's why. So that will create again this herd mentality, right? So he has invested in this stock with some crore of rupees, so expecting that the share will go up.
We should do our own research. That's what I'm saying. It definitely comes under herd mentality. Just because Rakesh Jhunjhunwala has invested or Vijay Kedia has invested or Damani has invested in some shares, we can't invest like them.
Yeah, I have a
Because
point to add here. There are some speculative stocks also, like the Brightcom Group or something.
Yes,
One of the
right.
famous investor has taken a lot of a lot of positions into that, and
Yes,
he was continuously promoting, and it ended up like a disaster. So yeah, sometimes companies also might use the famous personalities maybe by offering something to them, like
They get paid. They get paid,
Yeah.
buddy. They get paid. They get paid to
Yeah.
promote. Not only such big famous personalities. Even people like me get paid if we are ready to.
Exactly.
promote
Another
some
example
stock.
is Ambika Cotton, another stock. I have seen somebody like Kedia only has invested. I think that the stock has gone up 30% in 2 days. But later it has never reached that price. That no, every channel and everybody was talking about that, and in 2 days 30% it has gone up. So people were running behind that to catch it.
That's
It happened a
exactly
year
herd
before.
mentality.
Yeah.
Yes, we are getting it to public. I am very happy that you are getting it perfectly.
Yeah, another
That's
crazy
what I-
guy. Crazy guy. I came across a few days before. He was advertising in a way like, when you have a lot of money and why you are charging for the whatever sessions you are doing. He gave some crazy answer saying like, if it is free of cost, nobody will focus and nobody will follow the class. So I'm charging some money. So I am
you
not
guys
convinced.
know about Sundar, this PR Sundar.
No, not PR Sundar. Some other guy.
Yes,
I
I know.
forgot.
I am
Bombay
saying
way.
about PR Sundar. PR Sundar, I used to follow him in my earlier days.
Yeah,
So as of now, he is not even registered with SEBI and he is making investment advisory services he is giving.
exactly.
So,
Recently, he got some problem also. He had to pay. He has to pay some penalty, something to
somewhere around
SEBI.
crores, it is on crores.
Exactly. He got banned also from trading. Yeah.
1 year. This fellow, he is very cunning really, because he is advertising that now he will go and he has stopped trading in India and he is trading in US stocks.
US and Dubai
doesn't say
also,
that.
his
He
NRA status
doesn't
he
say
is
that
trying to
he
build.
has been banned. He doesn't say that he has been banned. He says that now he is into that US stock trading.
Exactly. Yeah.
So these stock market is filled with the people like this. They make money by selling hopes. Okay. So we should not blindly follow them. Before buying stock, for example, before buying even Infosys also. If Infosys is a very good company, fundamentally there is nothing to say anything wrong about Infosys. People who rate Infosys do not know about software engineering, first of all, and orders, all those things, order book, all those things. These rating services. So I think last year, I think it will come in the slide also, I think. But last year when Infosys were trading around 1900, these people were giving targets 2400. 2004 never reached 2400. It is now, I think it fell to 1200. Now it is around 1300 rupees. These are very good rating agencies and financial services. They are very big names. Forget about these fake influencers. I'm talking about legitimate SEBI registered groups. So no one knows anything in stock market with clarity. We should be the one with clarity in our mind. That is the only way we will stop being in a herd. Okay. I think I am clear with this point. No herd mentality. Just because our friend is buying or our relative is buying and he has made some money, so he has bought for like 10 rupees in the penny stock, it has moved up to 20 rupees. We are not going to put our money there. Even if you are to invest like 10,000 rupees also, just think, why to waste the 10,000 rupees? Just put it in a stock where you know something about, first of all. And it doesn't mean that you are going to buy it whatever the price. I have given the example of Infosys. If you had bought it for 1900 last year, now it is in like 1300 rupees. So you have lost 30 to 40% of your money. Infosys, we are talking about Infosys. If you buy the share at the wrong price, forget about even Infosys can create losses like 30-40%. Then think about stocks like some of you guys have mentioned. They will become like, they will fall by 60-70%, 90% also. Some stocks have fallen by 90%. Okay. So one more regarding this head mentality. We know about cryptocurrency. I think you guys might have heard about cryptocurrencies. Hello?
Yes. We all have burnt our hands, I think.
Yes. I got a call from a High Court advocate. I got a call from a High Court advocate asking my advice to invest, whether to invest in Bitcoin and all these things. All I said was, ma'am, if you are gambling with the money, put your money. If you want to really invest in that, no. Don't burn your pockets. That's the simple advice I have given. After that, we know what happened to cryptocurrency in the last 1.5 years. So people don't know what is cryptocurrency. Even I don't know what is cryptocurrency. What it does, I don't know. So I never invest in cryptocurrency. I never. Yes, if you want to gamble, just put 5 to 6% of your money. So if I am investing 10 lakh rupees, somewhere around 20-30,000 or 50,000 max. Oh, you are gambling with that. So when you are gambling with that, treat that as a gamble and don't put 100%. Don't put not even 100%, don't put even 10% also. Somewhere around 5%, that's it. That should be the maximum when you are gambling. People make money gambling in stock markets also. That we should remember. But that doesn't mean that we are going to gamble with everything we have. Okay, let's go to the next one. Emotional bias. Again, I am going to read out. Emotions play a very important role in decision-making process for retail investors. Greed and fear are two prominent emotions that drive our investment decisions. For example, fear can lead to panic selling during market downturns, while greed can cause investors to chase hot stocks without thorough analysis. I think someone of you mentioned about BCG, Brightcom Group and Ambika Cotton. Which bias comes here? Emotion bias, greed or fear? Hello?
Can you repeat the question? I think it's not clear.
Not clear. Okay. So we have mentioned about, someone of you have mentioned about Brightcom Group and Ambika Cotton, no?
Yes, myself, Dhanapal actually.
Okay. So please name yourself because I only see the screen here. I don't even see
Yeah, Dhanapal, yeah.
So under which emotional bias does it come? Greed or fear?
I think you can say greed only.
Obviously greed. So
yeah.
Okay. So here I have given the example. First one is Nifty fell to. Okay, I'm going to show the chart also afterwards. So Nifty fell to 7,600 levels. I remember that day, and I had some money. I have invested quite some money in that, and whole portfolio was down 30% in just 2 days. Okay, during COVID crash, market crash. So what most I did not exit from the market, okay, but most of the people just were they were so in panic that they have bought it for like say 100 rupees, they were selling it for 70 rupees or 60 rupees also, and going away because COVID everything will vanish. That was what we were thinking. So we are afraid of markets turning into ash or something like that. They had never turned into zero, but we are afraid of like that. So what happened to the Nifty after? In next 20 years, it moved to 18,600. So it moved by more than like 200%. In the next 20 months, means 1.5 years, that's it. By October 2021. What most of retail investors were doing? They were withdrawing. from their mutual funds, whatever, their direct investments or mutual funds. So I will take you to the chart, okay? So this is what, please don't see all these things, you might get a bit confused. So let us focus on this, okay? Because I do some analysis of my own, that's what I create all this. I think there was a question on demand and supply, Karthik. This
Yes.
is demand and supply charts.
Yeah, we are not very advanced on it. We are at the basic level.
Okay. So I think someone was explaining about demand and supply numbers. So these are demand and supply charts of Nifty. So forget about that. So see, Nifty was somewhere around 12,000 when the news came of COVID. What happened? It fell to like 7,600. So it fell by more than 35%. We are not talking about any small cap or mid cap. We are talking about Nifty. Top 50 companies of our country, okay? Like TCS, Wipro, IOCL, Reliance, Bajaj Finance, all these things. So stocks like those were falling by 35%, 40%. So whole Nifty fell by like 35%, I don't. 35 to 40% mostly. So if you see here, I have done some lines. So this is net investment, okay? Red color is net investment. FPI means foreign portfolio investment. So DII means domestic institutional investors like LIC. This is retail investment. So most of when the stocks were falling, these PFIs, how much they have invested? In the before year, they have invested only in 6,000 crores. When the market fell in this area, they had invested like 2,74,000 crores in crores, I'm saying. So people like foreign portfolio investors means they are institutional investors, so they have their own research and analysis. They are investing. They are the big players. Okay? They are the big guys in the market. So they were loading up their pockets. They were loading up their portfolios with stocks. But meanwhile, retail investors, they were selling during that area, that zone. So that is a classic example of fear. So everything is going to come to a standstill. So it's not going to happen. Like for example, COVID. We know what happened in COVID. Lockdown for like 1.5 years or something like that. Lockdown was continuing like anything. So even I was afraid what's really going to happen in the markets. I was really confused. I did not know what's going to happen. So but what I did was I had invested, so I will not take this money at a loss. Why? I had invested at 100 rupees, it fell to 65 rupees. Why to take that loss? I will hold that. Let us see what will happen. That was my mindset during that May 2020, somewhere around that. But luckily market just reversed after that. And it was a tremendous recovery. More than 200% in like say 20 months. That is very good, superb performance of the market. So we should not let this fear guide us when in making investments. When you are coming into the market, know that yes, I am ready to take this much loss. For example, you have like net worth of 10 lakh rupees. I am just giving an example. So if you, for example, you can put 2 lakh rupees. This 2 lakh rupees, even it goes to zero also, it's not going to affect you. Only that money, if you put in the markets, after a good analysis, you will be confident. So even if market falls also, yes, I have rest of the money with me, so I can feed myself, I can take care of my needs and wants. If you're confident in that, you are not going to make these decisions in like panic selling. Okay. But what happened after 18,600 market reached? Market again corrected. Because after this kind of a rally, markets will definitely get corrected. No one is going to just put money because money doesn't go on trees. So they have to take some of their profits and do some shuffling in their portfolios. And people get a bit skeptical after this much growth in the markets. So we won't see that much GDP growth also of economy. Economy can't grow like anything forever. definitely it will come to a standstill for some day. It will take a pause. So during that pause, what happened? Even in US case also, US interest rates. So I don't think that I'm getting into too complex one, but US interest rates are the main cause for this. They were raising their interest rates to control the inflation. So US is like big daddy of stock markets. 60% of the whole stock market belongs to US people. US stock market, NASDAQ, New York Stock Exchange. Okay. So what happened again when it reached here? I remember last year, again people were expecting a crash into these zones. But market recovered again. So what I'm saying is don't put too much effort in like following market too much. If you are confident with the investments, hold on to it. But make sure that you have money for your needs and wants. So you should be able to get in your life, go through your life, not being that much affected. And next example is Adani Transmission. Guys, I think you all know what happened to Adani stocks. I think 6-7 months ago, there was a big ruckus about all these things. Adani stocks. A report from Hindenburg. Anyone know? Hello?
Yes, sure.
We know.
Hindenburg's report, stocks were falling with 40-50%. So again, this is one of those stocks like Adani Transmission. I'm not against this stock, okay? Fundamentally, it might be good, I don't know. But wherever you are buying is also important. See, for example, during COVID, it was around 200 rupees. But after COVID, in the mania, what happened? It moved to 4,000 rupees. So it moved by 20 times, so 2,000%. During the same time, the net profit of the company was up only by 81%. Okay. So net profit of the company was only up by 81%. Means they were making 100 rupees before. Now they are making 181 rupees. That's it. But stock moved up by 20 times. So profit not even doubled, but stock price moved up by 20 times. So what happened? Let us check in the chart. This is what happened. So it went to 4,000. Now it is around 800 rupees. So imagine the people who had, again it also comes under herd mentality as well. So people were buying, TV channels and websites were promoting Adani shares because they are like next Ambani of India or even better than Ambani. So there are many news like that. So because news like Adani beating Ambani network, this is one of the most misled one. Okay, why should we care about Ambani or Adani beating each other in networks? We have nothing. But people, retail investors, what they think is yes, Adani is getting richer. So Adani's net worth is increasing. So if you buy their stocks, so our net worth or our portfolio also will increase. So this kind of promoting the websites and the TV channels also has happened. So that mania led to not only Adani Transmission, many Adani stocks have just moved like in. So I have taken one example. So it was like somewhere around here 200. In COVID crash, it was trading in 200s or 180. I have taken round figure. So it just moved up to 4,000 rupees, even more than 4,000. So wanted to fall to 800 rupees. So people who have bought here, they have lost I think like 80% of their money. So this is greed buying. So buying only due to greed. So because if you just analyze a simple thing, why do stocks price move up? Their stock price is directly linked to the profit they make. This is bottom line. They call it this as a net profit as a bottom line. So bottom line of the P&L statement, profit and loss statement. So profit, earnings or profit, whatever it is directly related to the price of the share. So if profit has moved up by like 81%, so the share should have moved to like, so for example 400 or 500, but it moved to like 4,000. So it doesn't make sense. So we should be able to have that much idea. So I'm not going to buy a stock at this much inflated prices. Okay guys, am I clear here? Am I clear? Hello.
Yes.
Yes, sure.
Shiva, if you
When I-
allow me, I would like to just show something related to emotional bias.
Okay, sure.
Just wanted to share this. I saw this from someplace. I'll just share my screen. Can you stop sharing? Sorry, you guys, to disturb. I felt this is very important. The only purpose of why this is happening.
I have stopped sharing.
Yeah, I'm sharing my screen. Hope it is visible. Can you see?
Yes.
Can you see the screen?
We are able to see.
Yeah. So if you see, this is the S-Bank stock, S-Bank Limited. There was an issue in S-Bank sometime like 2 years ago or something. So these are all lines of shareholding of different people. Like black one is promoter holding, mutual funds, insurance companies, FIIs, DIIs, and individuals like us, retail investors, individual which hold less than 1 lakh rupees invested. Like that, shares pledged by promoters and others basically. So these are the trend lines of each of the shareholding. This is Treasury Finance. If you want to refer it later, this is Treasury Finance website. So if you see this maroon color line, the top one, which my mouse pointer is at, it is at 42.52%, right? So it is at 2018, below 30th June 2018 time, the promoter holding at 42.52%. You see, follow this line, the maroon line. From here it started falling, right? The shareholding, look at the top one here. The mouse pointer is not good. The maroon line, the top rectangle, FII 40.33, right? Hope I'm clear. So it started falling. They reduced to 33%, then they reduced to 35%, 26.5%, now third one. And finally they came down to, where is FIIs here? FIIs 1.95%. Can you see the fourth rectangle? Can someone confirm?
Yes.
Yeah. So what does it mean? From 2019 March onwards, 2020 March, within 1 year, they reduced their shareholding in S-Bank Limited from 40% to 2%. And they sold off their 38% of the stake in S-Bank. Am I clear till now?
Yes.
Yeah. But look at this slight purple one. I don't know what color is it, peach or a purple kind of. Okay. Look at the same period. I'm pointing the individual here, the third rectangle, which is 11.13%, which are us, retail investors. Okay. At same period, 31st March 2019, individual shareholding was 11.13%. And the same period of December 2019, individual shareholding is how much? 43.66%.
Yes.
Okay. So in the same 1 year period, FIIs have reduced their stake from 40% to 2%. Individual retail investors have increased from 11% to 40%. What does it mean? So they sold S-Bank to us. FIIs sold S-Bank to us. We have been herds in the herd buying it because of the past sentiment of the S-Bank company. Without checking what is happening in this 1 year period, every one of us or retail investors have invested in the company just by checking the past emotion people have with it. S-Bank is okay, good company, big bank. Now HDFC Bank, if you say without knowing anything, you say, okay, it is good bank. But nobody cared to see like what is happening with others. Look at DIIs here. If you see DIIs, everybody, mutual funds, DIIs, everybody reduced their stake in this 1 year period. Only retail investors, only this line has increased. This is the thing. So without research, if we do with the past performance or what is told in the news, what others are doing, this is what happens. So once they buy, they sell off everything, reached 40% and the stock fell. This orange color is like after the bank is taken over by consortium of banks like SBI and other banks, 4 banks,
Yes.
different banks took over the S-Bank Limited from here. So that is why this orange color is above now. This promoter holding will be above from here. So after the crash happened, DIIs, 4 banks consortium took over and it is little bit stable at a very low price. Imagine somebody, now if you see the price, Hopefully I can show you quickly. Yeah. So December 2019, right? How to go to price? I'm not very used to this one. Let me show in Google itself. Take 5 years. Look at the share. What we are talking? 2019, right? March 2019, April 2019, somewhere here. 245 rupees, right? And March 2020, how much was it? 24 rupees. 250 rupees to 25 rupees. And what people are doing from this price to this price, retail investors have been buying and it never recovered. Hope I am clear. So
Yes,
this
yes.
is called falling knife. Okay. With the past emotions people had with S Bank. Look at the past performance of the company. See, the graph is like very good. You see, news would have come like if someone have invested 1 lakh in S Bank in 2005, it would have become so and so crores. The past, everything is good. Once the issue is there, people started to sell off like FIIs, DIs, everybody. And this is called falling knife. People caught the falling knife very well with the past emotions. Yeah. This is again emotional bias, herd mentality, everything. If we do not know what is happening with the company, we end up buying and we lose money for entire it. Imagine when it should come, when the bank should recover, it's only God only knows. Yeah, thank you.
Thanks, Karthik. So I have a question to Shiva here.
Sure.
So like we have FII, DII and other things, right? So if we are checking on this, one of the aspects, so which one is a better reference? Like FII is the better reference or DII is the better reference or any other thing?
Basically, it depends on promoter holding as well. So promoter holding is the first one. Afterwards, FII and DIS. Okay. So that doesn't mean with promoter holding of like 10-15%, the stock is not a bad one. It's not a bad one because if you see, go and check Infosys, I think promoter holding is less than 20%. So
No,
these are all confused.
when we compared to previous and now as we had, right? So after 1 year duration, FII has been reduced from 40 to 1. So how about if, as you said, promoters, if still promoters percentage is same and FII has a drastic reduction, is it still a good sign?
So
in that case,
everyone has
promoter were pledging, Nagaraj. They were pledging the shares. So it is only one of the factors you should check. That is a red flag for your further analysis, I think. Sorry, Shiva.
Okay, no problem. And so it depends. Okay, for example, we can take any share. So there is a very good website. Okay, anyone follows Screener? So
Yes.
you can see here Screener. It's a very good website where I follow. So for example, if you see, take Infosys. So I think in the bottom he gives shareholding pattern. See the shareholding pattern. So promoter holding is somewhere around it's less than 15% most of the time. So see FIS and DIS. So they are equal.
Yeah. So when compared to past, the 3 holdings has been in the positive trend. Even if it is 1%, it is in the positive trend.
Yes. So simple. Who asked the question?
Nagaraj.
Nagaraj. Simple thing is FIS look for their own thing. Okay. FIS they don't bet on development of our country. Okay, because everyone wants their own country to develop. So if what they do is, if the stock might do, the economy might go well, only if they have that kind of mindset, they will invest in the stock or, for example, any country. It is as simple. But DIs are different. They try to support the stock or country by buying the shares. That is what exactly LIC was doing during 2020 COVID crash. So it is solely up to us, okay? First of all, we should know, that's what I'm saying. We should have our own analysis. So we can use both. So if you want to be like, what to say? For example, if you're not comfortable, so if you're not comfortable investing easily on money, so you are like, you will think twice before investing. Then think about FIS. Now, if you are really confident about the economy and stock, all these things, or the stock will perform well, then you can see DIS. It's solely up to us, either DIS or FIS. But in the short term, it doesn't matter also. Same goes for Infosys. Infosys fell by like 1900 to, see, can see the share. So it fell from 1900s from 2022 to somewhere 1300, 1400. During the same time, so if we check what happened to FIS, what happened to DIS. So DIS, they have loaded up, you see. FIS, they remain same or they reduce, something like that. So these DIS were supporting. So what our legendary public were doing, they were selling in the stock. They were selling. Still they are selling only. So these
Public has been reducing. So just as an example, if you take this as an example, so FIIs, promoters and DIs are in positive, and public shareholders good to select this stock for midterm. Just guessing my thoughts.
Yes, obviously. It's not a bad thing to invest in such a good company. But again, nothing is comes with a guarantee in the stock markets. Anything can happen. So yes, because people had bought Infosys for like a year ago, they were buying it for 1300. After more than a year, still it is there only. So negative returns, to be precise. So midterm, the stock price doesn't make that much sense. So if you are investing for long term, just go back 5-6 years and see what stock is really doing. It is as simple as that. So there is no clear-cut simple idea like simple indicator or regarding FIS and DIS. We should have our own research. Of course, if they have the stock with them, it's a good sign for us. Yes, FIS are buying, so it might not be a bad stock. But that doesn't mean you are buying it at a inflated price. Even Infosys, when you have bought it for 1900, you have lost your money. Okay.
Okay.
Did you get my point?
Yeah. I would like to add another point, Nagaraj. Basically, FIS means it is not one institute, right? They are multiple institutes. Each institute has their own perception and they are investing in it. And the risk appetite of them will not be same as ours. So they invest in hundreds of companies. Their risk appetite will be more. Probably they can bet on 1 or 2 companies more than the other companies. But retail investors will invest only from 5 to 20 companies. So our risk appetite will be according to us. Basically, we can take that as a point to consider, but we should not blindly follow the FIS or DIS.
Okay.
That's my opinion.
Okay. Let's come to the next 4 biases. All of these biases are a bit different from one another, but I have seen all these 4 biases in one single era or in COVID era, to be precise. So let us see one by one. Overconfidence. Many retail investors exhibit overconfidence in their ability to pick stocks and timing the markets. People sometimes they called me during those times. When I say no, why are you investing why are you investing stock at that high price? They convince me it is a good stock. It's giving returns. Profit has increased. So they were trying to convince you. So they were trying to convince a research analyst who has his profession in stock markets. My whole profession is stock market. I just from morning to evening I only do this fundamental analysis, technical analysis, buying stocks, selling stocks, profit and loss statements, fundamentals, all these things. I do this. So they were trying to they convinced me also, but I never invested in that. So this is our convinced. We teach the people who have been more in that field. Okay, I have my own friends who are doing this to me. So this overconfidence leads to excessive trading, taking on more risk and neglecting diversification. So for example, I have said no. So you have 10 lakh to buy Yes Bank as Karthik said, or Adani Transmission as I said, 2 stocks. Those 10 lakhs would be like 1 lakh now. So that's not the case. Proper diversification is important. So overconfidence comes from the lack of experience and knowledge, as well as selective memory that focuses on successful investments while downplaying or forgetting failures. So what happened after COVID crash? Markets were moving up only. Every stock, I have seen stocks that have moved by 50, 60 times also. So 10 rupees, 600 rupees. So those are small caps. So large caps also they moved by 10 times, 20 times. Tata Elxsi, if you remember, I think it moved like 20 times or more also. So every stock was moving. So people were confident that a stock market is only going to go up. So every stock I buy will go up only. Because they have seen only short period of time. They have not seen last 5 years what happened, or in 2008 what happened. They have not seen this. They have not seen the stock market cycle. So they have only that memory of that 1 year or 5-6 months. So that's overconfidence. Confirmation bias. So when you have overconfidence, obviously there will be confirmation bias. You confirm yourself that you know enough about the stock. So retail investors are inclined to seek information that confirms their existing belief or a bias about a stock. They may ignore or look contradictory information that challenges their belief. So if anyone like me, or if anyone who tells no, why are you buying this at that kind of a price, and we don't know what's going to happen. Markets are not going to move up every time forever. So they don't listen to me. So if anyone from that WhatsApp group says yes, buy this some stock and it's going to move, like it's going to double or triple or multi-bagger. This is the term they use, multi-bagger. Most of the people don't know what is multi-bagger. These people use multi-bagger term. So this bias can hinder open-minded decision making and prevent investors from considering alternative perspectives for investing. So what they do, they'll buy 2-3 stocks. So 2-3 stocks. So it is moving like Tata Elxsi was moving. So they will buy somewhere around 10,000 or other stocks, like many stocks have moved up. So we can take examples. So most of the stocks that moved up by 20-30 times, they fell also by 50-60% also. The stock that moves up more, it falls more also. So this kind of experience will get only when you are in the stock markets for longer period of time. Next one is behavior biases. So there are 3 behavior biases here, which we shall discuss now. So various quantitative biases influence the decision-making process of retail investors. Common bias include anchoring bias. So relying too heavily on one piece of information. So anchoring bias, anchoring. We know what is ship and anchor. So anchoring bias. So we'll just follow one financial guru, some XNX guru, some Telegram guru, all these things, or a website. I will go and follow only Money Control or Times of India website or Economic Times. I'll only see that. I'm not bothered about other websites. Next one, website or media. I am only going to watch the Business or CNBC. So only sticking to the particular channel or particular source that suits their mindset, that suits their belief. So this fellow believes that the stock is going to move up, or stock market is only going to move up. So he will only watch those TV news media or whatever it is, or websites or Telegram or other gurus who anchor their their bias. So they feel that market is going to go up, and so they are only going to watch that kind of news. That is anchoring bias. Availability bias. Next one is, so giving too much information to readily available information. Everything is easily available nowadays. If you compare it with 10-20 years ago, the information was very difficult to get. Now internet evolution has happened. So now what happened? Now what's happening? Everything. So whatever I know, you know. You go and type in the Google, you will get the information. So much of information is available. We are not able to pinpoint which information is helpful for us. So much of information. So we see the stock is going up, and Adani is beating Ambani, and 10 different news channels and 10 different newspapers. Something is happening, so I will buy Adani stocks. So that kind of matter. I'm not pinpointing Adani. I'm just giving most what happened that was the most frequent news that we used to get 2 years ago when Adani was moving up. So I think he moved up to third or fourth place, richest person. Next one is recency bias. So placing exaggerated importance on recent events. So that's what I'm thinking. Last 6 months, 7 months, they have taken the data. So markets are moving, stocks are moving. So I will put the money. So I'm not going to see whether what the stock is like high priced. It is for trading at a ridiculous high price. So for example, the stock has already moved up by 10 times. Why will it move up by another 10 times? If it has to move 10 times, then from bottom it will be like 100 times. It is not going to happen, no, 100 times within 2-3 years. The stock has already moved up by 10 times. So use our common sense. We should use our sense really. Already it has moved by 10 times. So does it profit increased by 10 times or even at least 5 times? Why would it go by another 10 times? This fellow puts it in the bag, multi-bagger already, so he will buy. So this kind of mindset, that is recency bias. So for example, currently people are afraid of investing IT stocks. We have seen IT stocks like, if I have explained now, Infosys, it fell from 1900 to 1300. I think Wipro was around 720, 730. Now it is around 400. TCS was over 4000. Now it's in 3000s. So Tech Mahindra also from 1700. Now it is in 1000 rupees. So somewhere around all the major IT stocks I am saying about, top 5 IT stocks. Most of them fell by 30% or 20%. So now people are really afraid. I'm not going to invest in. So if you have seen, we have seen now Infosys, what happened, people's retail investors percentage have reduced now, you see. So stocks are falling. So obviously we will reduce our portfolio. This is what happened. This is retailers. Public means retailers. So what DIs are doing, what FIS were doing. FIS were stable, but DIs, they loaded up the shares. Who are these DIs? Domestic institutional investors. LIC, legendary LIC company. Would anyone know better than LIC regarding a stock? So this is a simple example from me. Next one, short-term focus. So if you combine all these things, then this comes short-term focus. Retail investors generally have a short-term perspective, seeing quick profits and reacting to immediate market trends. That's what I have explained in the before also, like in behavior bias or confirmation bias also. This drives impulsive decision making and neglect of long-term investment strategies. So you are investing only, so for example, X and X stock has moved up by like 10 times or whatever, 5 times. So it is going to move. Whether if it falls by like 20-30% also, that's it. He gets panicked and he'll get exit. So if the stock has moved up, if just do your own research. It doesn't mean if it fell by some, so it moved from 500 to 1500 and it falls to 1000 rupees or something like that. There is no need to panic, sell and exit from that. If you are confident about the stock, hold on to it. That's why I have said you should only invest in the stock market that money, which if it reduces zero also, it should not affect our day-to-day life. So we should know the difference between investing and trading. Two are different things, investing and trading. Investing means you're holding for a long time, like for 10 years, like your kids' education or marriage, whatever, all these things. So when you're investing some money, you're think long term. When you're trading, it is like short term. There is like intraday trading, every day you will buy and sell, or I do positional trading, which I hold for some months or 2 years also, depending upon the price action. So we should know what exactly we are doing. So let us see the example. So single example I have mentioned earlier, that is the simple one. That's I have written here. So after COVID-19 stock market crash and lockdown situations, many new investors or traders enter the markets. So we have already learned that retail investors like tripled, they more than tripled after the COVID-19 lockdown. All they needed was a smartphone and some capital. So stock markets all over the world were booming up. Nifty doubled in less than 15 months. Many small and mid caps were like 20 times or more. So everyone seemed to make money in the markets. So it is as simple as that. So this comes confirmation and covers over confidence bias also. See next one. I remember some of my friends calling me. Some of my friends, they were calling me and they were asking me, why are you not able to make this much money? Like in lakhs or whatever it is. Why are you not making? Because we are doing only part time. So my salary is like 50-60,000. I am making 30,000 only in trading. Why are you there only? So you are a full-time investor, should make too much money. This is overconfidence. They have not seen a cycle. They have invested some money in some shares that have moved up. So these people know that they know everything. So this comes under overconfidence and confirmation bias. So what happened? Markets will definitely fool everyone who thinks that they are better than the market, and stock market is easy. Stock markets is very difficult. So people have this idea that making stock markets money is easy, okay, or it's a gamble. So people, if you make some money in a short period of time, yeah, stock markets are easy. I'm an expert. No, if you are lost the money, then it's a gamble. So we have to come out of this mindset. We have to really come out of this mind. We should treat stock market as a source where we can invest. Okay, we can invest or we can grow our capital and our knowledge also. We will be helping the country also, Indian growth also, economic growth also, by investing in good companies. We are really helping our nation do better also, GDP. Next one, obviously after 2020 what happened? Even Nifty corrected by like 15-20%. So most of these hot stocks, they were buying it. For example, Adani Transmission, 4,000 to 800. Same thing happened. So most of my friends, they lost all of their capital. They left the markets. So now I don't get calls from anyone about investing or what they have invested in the markets. So like I don't get a single call now. But 1.5 years ago, when market was moving up, everyone used to call me. I'm making this much money. I'm making this much money. So it is clear. We should respect the markets. So study well, okay. Read what's happening for the last 5 years at least, if not 10 years. What's really happening in the markets? We should know that, okay. Any doubts? Next, but before moving to the other one, any doubts on these biases? We'll know what we have discussed. Hello? Hello, Karthik?
No, Shiva.
Yes, sure.
Oh.
I was answering a question in the chat. Sorry.
Okay. Okay, I'm going to the next one.
Yeah.
Next one is the loss aversion. So retail investors are often sensitive towards losses than gains. This is known as loss aversion. Okay, aversion means we tend to avoid losses. So we can't take a loss. For example, if you have bought a stock and you fell by like 5-10%, we don't take that loss. So we, for example, we have got a bad news about the stock, but we are going to hold the stock only because we don't want to sell the stock at a loss. This is that's what I have mentioned. They might hold on to losing positions for longer than necessary, hoping for a recovery rather than cutting their losses. As Karthik told about S Bank, it's like catching a knife. Sorry. So this behavior can be driven by fear of regret. So, or to avoid admitting a mistake. So our mind doesn't allow us to admit that we had made a mistake investing in a certain stock at some price. So we don't want to accept it. So we'll just hold on to that. So according to scientific research, what the pain of losing money is 3 times the earning same amount. So if you make 1 lakh rupee in the stock market, then you're happy. If you lose 1 lakh rupee in the stock market, then you're 3 times more sad than making money. Am I clear? So people have this kind of mindset. We are so emotionally connected with the investments. And the next one is lack of financial literacy. So obviously, many retail investors have limited knowledge and understanding of financial markets and investment principles. So when we say stock market is a gambler, all these things, we have a limited knowledge. I don't say stock market is gamble is wrong, but what I'm saying, that is a limited view of the stock markets. It's as simple as it. So this knowledge gap can contribute to irrational behavior, susceptibility to market rumors, and reliance on tips and recommendations from unreliable sources. So if you are financially literate, you will never listen to that Telegram channel guy or some other WhatsApp chat, whatever. The guy who says this is going, the multi-bagger, this is going to move. So if you can analyze stock on your own, if you have your financial knowledge, so obviously you will not listen to them. So we should do that. Okay, we should make ourselves knowledgeable about the investments. So like learn about interest rates. Can anyone say about what is the current interest rate on government bond, 10 years government bond? rough estimate. So that's it. So it's around 7%. Okay, so interest rate, so inflation. Inflation means the prices of the goods and services that go up every year. So that's called inflation. So why inflation is happening? So inflation we should know. And types of assets. There is not only stock market or gold or real estate. We can combine, you can invest in every single asset if you know perfectly about them. So as I've already said, learn about stock market performance for last 10 years. Read as many books and research papers available for us and improve the skills. So we can make money in the stock markets only by learning, only by knowledge. And the last one is lack of diversification. I think I have already mentioned this one, but many retail investors have a tendency to concentrate their investments in a few stocks or sectors they familiar with. So they neglect the benefits of diversification. These people buy only 2 or 3 stocks based on like Suzlon Energy. People were buying this stock. I don't know why they were buying Suzlon Energy. I don't understand the stock also. Or S Bank. I never understood these stocks. Being a research analyst, if you can't understand the balance sheet, then don't invest in it. If I don't understand the balance sheet, I don't invest in stock. It's as simple as that. So lack of diversification exposes to higher risk. So obviously, if a stock falls from 100 to 20 rupees, you are going to lose 80%. So best example is during COVID crash, Nifty fell by 30%. Whereas Bajaj Finance is a large cap, but it fell by 55%. So if you had invested in Nifty, you would have lost only 30%. But Bajaj Finance fell by 55%. Some of the small caps were like 70%, 80% also they were down. So you get panicked. Okay, I don't say like we're going to sell the stock when it falls by 30%. You're going to get panicked by seeing the portfolio. If the portfolio of 10 lakhs reduced to 3 lakhs, you're going to get panicked. But if it falls by like 3 lakh and it is somewhere around 6 or 7 lakhs, okay, I have lost only 30%, I have risked 70%. So this is psychological thing. So, and last thing is not everyone really exhibit these kind of behaviors. Individual difference exists between every single person. So again, this trading platforms and social media also influence the behavior of the retail investors in the recent years. So we should be careful while choosing who to follow and which trading platform to follow, or social media, financial guru to follow, or our source. That's it, guys. Any questions regarding all these things? You can ask me.